developing your policies and everything, you need to ensure that whatever that you're giving to employees, is it aligning with, number one, with SARS, number two, is it going to get them into paying more tax and everything like that.
Welcome back to Brendmo Business Hub channel. Thank you for subscribing, and this channel is where we talk about, or where we share expert advice around your tax, your compliance, your business growth, and any other topics that help you grow your companies. So today I'm so glad that I'm joined by our assistant manager, Star, here at Brendmo. Welcome to the studio, Star.
Thank you, Mollen. Thank you for having me.
Thank you very much. Star, to those that doesn't know her, she was actually here once more when she was talking about performance management. But today, Star is going to talk more about the payroll aspects of different things around payroll.
Yes.
Really. So thank you very much for that, because I think payroll is every employer employee people. And there are certain things that you are going to share that you need them to take note of. Thank you very much, Star. So just to kick off, Star, what are the common pay-as-you-earn mistakes that you know of around payroll?
Okay, one of the common mistakes are misclassifying fringe benefits as well as allowances. So SARS has given codes to each type of fringe benefit or allowance, and when you're doing the payroll, you need to be able to apply the correct code.
Yes.
Because each code is taxed differently.
Okay.
So if you're using a system, you need to be able to choose the correct code. And then that will also ensure that the employee's tax is correctly calculated.
Okay.
Yeah. The other common mistake is that sometimes if there's changes in the tax tables, you then don't apply them on time.
Yeah.
So usually we recommend that you use a system which would then automatically prompt you to update and actually use the tax tables.
Yeah.
So if you're using manual processes, it's usually, you might not even be aware that there's changes in the tax tables if you're not sitting on your television and stuff like that.
Okay. So which means it's very, very important for employers, when you have people use systems. We are system driven, and we always urge our clients to use system, even for their payroll taxes and for their payroll run.
Yes.
You have to use systems as well. So, Star, recently there was a buzz around two-pot retirement system. Maybe tell us more. What is it?
Okay. So from September 2024, which is last year, employees rather, were allowed to dip into, or rather to withdraw from their savings, their retirement savings rather. So there's what we call the savings pot, where 1/3 of your retirement is put in there, and you're allowed to withdraw at least once a year.
Okay.
And how that works is that when you withdraw that amount, you go to the funder or the administrator of your fund, and they will apply to SARS for a tax
directive,
a tax directive, which then SARS determines this is the amount of tax that you need to pay. They withhold it for on your behalf, and then they pay you the difference.
Yeah.
So that is the
two-pot system.
Two-pot system.
Okay. So I know that prior to this two-pot system, if you have a retirement fund, you will be able to tap into it, but the tax rates were so ridiculous to try and discourage people to tap into it. But now with the introducing of the two-pot system, which means there's this saving pot like what you explained, and also the retirement part that lock until you actually retire.
Yes,
so
definitely.
From that pot you can't touch it until you retire. But this savings one, you can just take it and it will be taxed like your normal salary.
Yes, definitely. And then at the end of the year, when you're doing your tax return, you merge that, or you consolidate with whatever other income that you're getting, and then you can get whether there's any sort of difference, either you're paying a little bit difference or not at all.
Okay.
Yes.
Okay. Thank you for that. So if you are running your payroll, it means that this two-pot system is not necessarily in your payroll, because you say it's being administered by your fund managers.
Yes, definitely.
Yeah. Okay. All right. No, that's fine. So I want us to touch more. I think one of the common mistakes that you stated, Star, when you're starting was how do the codes, different codes that the employers can use for fringe benefits. So I think my question is, what are these fringe benefits? And yeah, if you can explain to us what is a fringe benefit and how does SARS treat fringe benefits around that?
Okay, so fringe benefits are rather the indirect benefit that you get from the company. So Brendmo is not directly paying me for but they're giving me a car. So definitely that's a benefit from my end. If Brendmo is giving me a loan that is at a rate that's way less than in the market, that's definitely a fringe benefit. So how SARS, I'm just going to give an example. In the recent financial year 2025-2026, they've said that the rate for interest rate should be at 8.5%, which means that if I'm going to get a loan from my employer, it needs to be at 8.5%. If it's less than that, that difference needs to be taxed because it's a benefit to me. So that is how it works.
So which means these loans, the benefits might not necessarily be monetary, but SARS is saying if you like the example that you're saying, you charge the loan to your employees at 2%. 8 minus 2 is the benefit.
Definitely.
And you need to declare that.
Yes.
And pay tax on that benefit.
Yes. So if SARS, if your employee rather goes does their tax return at the end of the year and it is discovered that they had a fringe benefit which you didn't incorporate into their payroll, they might pay the difference that you didn't pay during the year, which is a great inconvenience to your employees. So I think you'd rather just incorporate that to ensure that your employees
pay the tax
as they earn.
Wow. I know as companies we like to give benefits, but please know the tax consequences of the benefit. That if it's a fringe benefit, it's a benefit that also need to be declared, and you need to withhold the tax related to that benefits. So like for cards, for loans, for different benefits that you can actually issue out to your employees. So previously I had a conversation with Christine, who runs the payroll as well at Brendmo. Then she was talking about submissions, EMP 201, and in there, the monthly declaration payroll tax that she does. She mentioned that she submits UIF and SDL. Maybe tell us more about that and the rules that are applying around the UIF and the SDL, and what is it? What are they?
Okay, so the UIF is basically the unemployment insurance fund.
Yes.
Which means that as you are working, you contribute to yourself as an employee 1%, and then your employer contributes 1%. Which is then kept at a certain amount that if your payment, if your salary or your remuneration exceeds a certain threshold, you necessarily pay over above a certain amount.
Yeah, because I think someone will be calculating 1% of whatever, and, you know.
So it stops at 17,000 something.
Yes,
and then even when you claim, you don't necessarily claim hefty. So it limits how much you put in and also how much you can get from the UIF. And how that works is that monthly, when you're submitting the payee together with the payee, you pay it over to SARS, and then when you're done with that, you need to go to the UIF website and then you pay each employee that this is how much we deducted from STAR, this is how much this person contributed. And then in terms of the SDL, that is only required if the employer's annual remuneration exceeds 500,000.
Okay, what is it?
So it's basically the skills development levy.
Okay.
Which as soon as your remuneration for the year to your employees exceeds 500,000, you need to contribute 1%.
Okay.
And then how you benefit from it is that if you want to bring in skills and development to your employees, you can then claim from your relevant SETA.
Okay.
Which you can claim even a greater part of your contribution, and you can benefit greatly for your employees. And how the contribution or rather the payment is made is when you're doing your EMP 201, you also factor into that, and then you pay that 1% to SARS.
Okay. No, that's important. I think one thing that we will do again is to talk more about how can employers or companies benefit from the skills development levy, especially those that are contributing. So to try and advise to say how best you can fully maximize this skills development levy within your organization. So I think it's a conversation for another day. Then, Star, I wanted also to touch more that around that maybe someone is saying the skill development, but you mentioned that there are a lot of benefits. I think let's park that because I think it's a lot of information. But I wanted us to talk more on the allowances as well. Maybe let's go back to travel and subsistence allowances that company can give. People travel maybe for work to Cape Town, but they're based, and how how SARS treat that, because it's a very important part of that. So I want us to talk about travel, and I also want to talk about subsistence allowances.
Okay, so usually when you're sending your employee out of the country or out of town, you would give them a certain amount that they need to see themselves. They need to buy food, they need to buy airtime, they need to buy so and so. You can give them a certain amount, but SARS says that only 570 is what you can give them in their own tax.
Okay.
If it's above that, then it falls back to what we were saying. It's a fringe benefit. It's a benefit for the employee, which they'll need to be taxed on.
Okay.
And then, so what that goes back to is that when you developing your policies and everything, you need to ensure that whatever that you're giving to employees, is it aligning with, number one, with SARS? Number two, is it going to get them into paying more tax and everything like that? And then there's also similarly travel allowance. When your employer is traveling to a place for the sake of work using their own vehicle, they can claim about 476 cents per kilometer. And if you pay them anything above that, then it also falls back into a benefit. Which then the nitty-gritties we can discuss. It's a long process altogether, but that's how it is. So when the tax tables update, you also need to ensure that whatever that you're giving to your employees, you weigh, is it gonna make them to get taxed more, or are we giving them less?
So what I'm getting you saying is to say, when you are setting up policies within the organization, know the consequences of the policies. So it's not like a thumbs up. It's always important because SARS always have limits.
Yes.
They don't let you go on and on. Yes. So I would think, to simplify things, if you don't want complicated stuff, especially if you are still small, just stay with what SARS is allowing and the limit. Obviously, employees need more, but you need to know the consequences of exceeding that, so which is very, very, very important. Thank you very much, Star, for the wealthy information that you have shared, and I'm sure the employers out there or the employees themselves, they really get an understanding of what happens with structuring and the tax elements around their payroll or the pay-as-you-earn taxes. So thank you. I know we are due to come back, especially to dissect more about how employers can actually benefit on the SDL. Thank you to our listeners. I know if you found this content useful, and I know you did, because I know it is. So why don't you just subscribe to this channel, share with your friends that are running businesses as well, so that they equally benefit. And don't forget to hit that notification button so that when we come back again discussing about more topics, we're going to talk about salary structuring, how can your employees benefit more, we're going to talk about the SDL, how can the company utilize that to their advantage. So don't forget to hit that notification button so that at least you are not left behind. Thank you. See you in the next video.